Hello everybody and welcome to this week's Motor Trade Radio podcast in association with eBay Motors Group. It is Saturday the 23rd of January and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. So this is episode 399 of Motor Trade Radio, bringing you all the chatter that matters. And once again, we've gathered together this week's big industry stories for you to enjoy all in one place.
And there's a lot of them. And some big stories as well this week. So, I mean, first off, just a bit of a shout out to everybody that's been struggling with the floods this week and the snow and the rain with everything being happening. So I hope everybody's safe out there in these tough times that I know many people on the show listening today will have had this week with some of the flooding. So thoughts are with you if you are caught up in any of the floods happening around the UK this week.
Yeah, no, absolutely right. So this week's headlines, I'll just give you a quick teaser of what's to come. So good news for car production in Sunderland as Nissan commits to the plant and will expand its battery production. Questions have been raised over the future of the Vauxhall plant in Ellesmere Port following the government's decision to ban new ICE cars from 2030. Also look at the ramifications of part shortages for Honda car production at Swindon. So a good roundup there of UK car production. We've got an update on used car trends in the opening week of January. We've also got an update on ex-Pendragon boss Trevor. He's resurfaced in Sweden. We'll have a look at electric car trends because there's some interesting stories hitting the headlines this week, all of which have ramifications for the UK car retailing sector. And we'll finish off with a couple of big name appointments.
So the big story that hit Friday morning is and it was everywhere, wasn't it? I mean, BBC News really hit with it very, very quickly, and that is that Nissan have confirmed their commitment to continue making cars up at their Sunderland plant. And quite interestingly, I was involved with the VRA webinar this week, and Professor David Bailey was on, and it was one of the questions we posed to him was what are Nissan doing now following the Brexit deal, because obviously all the way through Brexit it was the threatening to leave if there was a no deal, etc., etc. But I mean, fantastic news. One, for Sunderland itself in terms of keeping the plant there and the employees that are there, but actually the supply chain as well that's involved with that plant up in Sunderland. So it's great that these guys have come straight out and confirmed it fairly early on in the year after the deal has been done. Following leaving the EU, that they are making cars up in Sunderland, and they've talked about other things, haven't they, in the story, Curtis?
Yeah, you're absolutely right. This is such a good positive, and I guess kind of unexpected story because we were tracking this over the course of last year and the year before because the mutterings from Nissan didn't look positive. But yes, in this BBC story, the Nissan's chief operating officer, Ashwani Gupta, says the Brexit deal is positive for Nissan, being the largest automaker in the UK. We are taking this opportunity to redefine automaking in the UK. Now, the absolute key to this story is battery production, because as we know, Nissan currently produce the 40 kilowatt battery at Nissan, but under this new deal and new commitment, they'll also be producing the 62 kilowatt battery. So that'll be instead of importing them from Japan, which kind of changes everything, because we've been talking over recent podcasts about the rules of origin, And this really firmly puts the rules of origin into the UK's favour, because my understanding is that at least 55% of the car's value needs to be derived from the UK to qualify for zero tariffs. Now, the battery pack is a major element of that. So if that's produced in the UK, that really does help with the export situation from the UK into Europe, which is why Nissan's given it a big thumbs up.
It is. I mean, it is great news, and we hope that because obviously this rules of origin goes back to even the shell of the battery, where's that produced, etc. So it's a very complicated process, and we talked last week about manufacturers looking at blockchain and other bits and pieces in terms of trying to track this, because it's a huge thing for the manufacturers to get around now in terms of this rules of origin. But again, every little bit does help. I mean, at the end of the day, to keep those costs down, and like you say, to have the factory, the plant in the UK producing those batteries, and keep, let's not kid ourselves, keeping Nissan in the UK as well is nothing but a positive news. I mean, that we know that at the minute a lot of their vehicle is exported. I think 70% is reported to be exported. But again, as we move through the Brexit and as the supply of vehicles into the UK from some of the global and particularly the European manufacturers may slow down, there is a risk of those slowdown. That export might change, and actually you might, there may be increased demand for the Nissan products from the plant in Sunderland for the UK market. So it's nothing but positive news, and it's great that now it's been confirmed and secured for as much the employees and the suppliers up in Sunderland as much as anything else. So yeah, fantastic news, and you can see why it's been the headline of the week, hasn't it?
Yeah, no, definitely, and it's worth adding to the bottom of this story, because this will tie in with a conversation we'll have in a few minutes, because production at Sunderland was actually paused on 2 production lines because of the pandemic and the impact it's had on the supply chain. So that pause is going on at the moment.
And moving on over to Autocar, and not so good news, unfortunately, and you do feel for the guys down at Vauxhall Ellesmere Port there, but Stellantis, which is the new joint venture now, have said that their bosses warned that due to the 2030 ban, that they could look at closing the Vauxhall UK factory. And we were talking before the show, weren't we, Curtis? I mean, you do feel for that plant. I mean, they've been through some challenges of turbulence, haven't they, and over the years, and managed to keep hold of it, haven't they? And
yes,
but now they've come out. The Stellantis boss Carlos has said that it could be at threat of closure.
Yeah, ever since I've been writing about the industry since the early 90s, every 3 or 4 years, there's a tender that goes through the system, and this was back in the GM days, but it's continued under PSA and now Stellantis as to who gets to build the next Astra. And it's always been a competition between Ellesmere Port and Rüsselsheim in Germany. Now, what Carlos Tavares has indicated is that with the UK saying that it will ban the sale of new ICE cars from 2030, that could, and these are his words, destroy the business model for Ellesmere Port in the UK. So, these conversations are going on now, and Stellantis, which is the new name for this combined PSA and FCA group, will be running the rule over Ellesmere Port to see if it makes sense in the future, especially with that 2030 deadline looming.
Yeah, it's quite interesting because in the story they do refer to border tariffs, around cross-border tariffs, which obviously the deal that we've had is the removal of tariffs, but he is referring to that rules of origin. So they're saying that as well as the UK's 2030 ban, Tavares has said that Stellantis needs to evaluate the impact of the new UK-European Union trade deal, particularly with the rules of origin that will require an increase in percentage of a vehicle to be manufactured in the UK or the EU to avoid cross-border tariffs. So there is a lot still to be decided from the deal, isn't there, and what the impact will be, particularly around the rules of origin. I think we talked around, Volvo are talking that their vehicles coming out, we mentioned it last week, coming out of Japan, that they will miss those going into Belgium and then into us. They'll bring them straight into the UK market. I know some of them Japanese and Chinese products are looking at the UK as an opportunity to bring products straight into, as some of these manufacturers such as Vauxhall look to come out of the UK. So a lot to be defined, and it's a difficult one to get your head around at the minute because nobody really knows.
No, and next headline, we're staying with car production, and it's from AM Online. Honda's temporary plant closure could be tip of the iceberg for supply issues, warns VRA. So this is the temporary closure of Honda's Swindon plant due to part shortages this week. And, we've talked about this before, and it's all to do with supply issues and also how new car supply issues will actually go forward in 2021. So the Vehicle Remarketing Association has a view on this, doesn't it?
Yeah, and I think it's not just Honda. There is other manufacturers that have said that this microchip has caused issues, and there is reports that it's not necessarily just to do with the COVID plant production of these microchips. It's as much to do with demand outside of the automotive sector and the order take and supply chain of this. But there is a view that the impact of COVID in terms of production of supply parts for the automotive sector has slowed down, as you'd expect. And then the addition of the EU exit deal and what that means for moving product distribution across Europe into the UK and what impact that will have. That there's been some discussions in recent weeks that the paperwork and the delays through Europe into the UK are increasing. The paperwork required, the documentation that needs completing, and there is a lot of distribution problems taking place. And these vehicles need parts, and they need that supply chain to be as efficient and productive as possible. So I think there is a risk that we're going to see a short to medium term impact on new vehicle supply, but adding to that, there is product on the ground. There is cars in the UK and across other areas that there is cars that were brought in before the Brexit deal. So there is product on the ground, but it's that order of product that may slow down. So positive news for opportunities in the used car sector, as there's pressure there in the new is really the message with this one.
Yeah, and in fairness, we were expecting a certain amount of bedding in after the Brexit deal was agreed, and this will take time. But it does make you wonder how long before it is resolved, and we start to see that free flow of parts coming into the UK for car production.
Definitely. And moving over to motortrader.com and a very timely and very great discussion around this one is that reports and data coming out of eBay Motors Group, who are the sponsor of the podcast, saying that dealers see an 18% rise in leads despite lockdown. And there's a little bit of context behind this because it's certain areas of the market, certain price bandings where they've seen this activity take place, haven't they?
Yeah, interesting piece of research, which I did see the original research on this because I did help the guys that put together this particular story. So dealer leads were up 18% year on year during the first week of the lockdown, and the first week of January. So interestingly, within that, there was an 11% year-on-year rise in searches for cars priced in the £10,000 to £30,000 bracket, which is particularly interesting because the other price brackets were sort of fairly stable, but more interest here. And we were talking before the show on whether or not this is a reoccurrence of the revenge buying that we were seeing during the ending of lockdown one. People maybe looking at other brands, more expensive cars. What was your take on this?
Yeah, and it's. This week has been an interesting one, particularly around what's happening with values in terms of consumer demand and the market in general. There is a view that used values are not necessarily going up; that they are fairly stable and dropping in certain instances. But out of those conversations, which kind of does support this, is that the sector is reporting that higher valued vehicle is strong. That sort of premium product is holding its own in many cases, that both the inquiries coming in and the sale price of those vehicles is very positive. But it's the mainstream product, the lower end product, that seems to be under a little bit of pressure on values and performance. But in the wholesale market, that sub £10,000, sub £5,000 trade vehicle is in demand. So it's an odd one at the minute, but again, some of this could be down to confidence of buying those more expensive vehicles in the online environment, as dealers can't do test drives and the customers can't visit the showroom. So we're trying to put, as a sector, we're trying to put pressure on the government at the minute to continue with click and collect and try and make sure that we can get the car showrooms open up as soon as possible in this first quarter, which is a crucial quarter for the retail sector. But again, maybe it is a confidence thing that consumers are a little bit more confident of buying and transacting the more expensive premium vehicles in the online environment. But yeah, it's a very interesting one, and maybe one that we need to do a little bit more digging around in terms of that data.
Yeah, and in terms of those leads, interesting to see that emails continue to be the preferred means of communication for buyers. And this has been a trend that eBay Motors Group have tracked since September last year. So that's where the leads are coming from. And interesting quote there from Mark Robinson, head of external sales there, saying, "We are seeing increased volumes of leads, a likely reflection of the hard work done by dealers across the UK to actively promote click and collect and delivery services. These moves are sending out a clear message to in-market car buyers that lockdowns do not equate to shutdowns."
No, exactly. I think there is, as we've gone through these different waves of lockdown and tiering, the retailers are getting better at it, and the consumers are getting more comfortable at it as well, aren't they? So it's you can see that now in the data coming out of these guys. So great news. And sticking with dealers to a certain extent, and this is we've talked about this before, haven't we? In terms of what will Trevor Finn do? What is he up to behind the scenes? We've been monitoring his posts on LinkedIn, his article updates of what he's intimating of what he may be doing and things like this, and a lot of speculations, haven't there, over the last 12-18 months, really, and maybe the COVID has slowed down some of what he initially sort of intimated at. But there's a story that has broken this week with Car Dealer, and the title is that former Pendragon CEO Trevor Finn joins Hedin Group as firm buys Ford of Sweden and becomes a super dealer. Now, we were talking before this, and it kind of got me doing a little bit of digging, because Hedin Group, it was familiar with me, and did a little bit of digging and shared it with you that, interestingly, that Hedin Group are the third highest shareholders in Pendragon. They currently hold on the latest that I can see is they hold 13.5% of the shares, or equities, should I say, and that's behind Audi Asset Management and Telius Capital Partners. So, and we've actually had some conversations. I've met their CEO of Hedin Automotive, a gentleman called Stig. he's been at a couple of NFDA events, and the NFDA interviewed him in January, earlier on this month. So quite an interesting one, this one, when you start connecting them dots, isn't it, Curtis?
Yes, yeah, it's fascinating. So, as you say, Trevor Finn has joined them, but as a non-executive director, and he is quoted in the story as saying that he's now working on this first super dealer project, and you can't help but think that maybe this is a template here. I mean, it's ideally suited for the Swedish market, and it will produce this. It's kind of a hybrid between OEM and retail operations. So it will see Hedin working very, very closely with Ford, but looking after the import and sale of Ford vehicles. Whether or not that template works in the UK remains to be seen, but it's obviously a model that Trevor sees as having some scale, and I think we can expect to see the rollout of more of what he terms super dealers.
Yeah, and they certainly are. I mean, if you've got time on your hands, have a look at hedingroup.com and their history. I mean, throughout the years, I mean, in terms of acquisition by growth, as growth by acquisition, should I say, wrong way around. They've certainly been on the acquisition trail through them European markets, and maybe, and I'm whether there's something in it in terms of the VAT implications that have been muted around Ford due to the Brexit, leaving the EU on some of the Ford dealers in the UK. Possibly there's something in that there's an opportunity there that these guys are looking to get involved with. But as always, and we say this every time that we talk about Trevor Finn and what he's up to, there's probably more to come, and I expect there is with this one.
Yeah, and there's a very telling quote from Trevor in the story. He says, the idea of running a leaner distribution model is very intriguing. It's very significant in the context of where retailing is going. Now, in those LinkedIn posts that you mentioned that he's posted over recent months, he has intimated that being outside of the industry has given him an opportunity to review how sales operate, how cars are brought to market. So I think we've got to watch this space to see what happens.
Exactly. So you've been listening to All the Chatter That Matters on the Motor Trade Radio podcast, brought to you in association with eBay Motors Group. We are your weekly one-stop shop for the big car retailing headlines, and available by subscribing on Apple Podcasts, Google Podcasts, Spotify, or wherever you can find your favourite podcasts.
Now, the next three stories are all linked because it's all to do with electric trends. So if we start with Autocar, the headline there is ex-Aston Martin boss says build batteries or lose UK car industry. So again, ties in with our very first story. But this is Dr. Andy Palmer, who listeners will know as former boss of Aston Martin and senior executive with Nissan before that. And he's calling on the government to really look at the building of gigafactories in the UK, and specifically he says the UK needs 4 battery gigafactories within the next 5 years to avoid losing the entire UK automotive industry. And again, this just sort of emphasises the importance of electric batteries, electric car production to the UK as we've moved towards the 2030 ICE ban. But it originates from an open letter to the Prime Minister, with Andy Palmer citing the factories, including, as I say, the ban of new petrol and diesel cars by 2030, but primarily stating that the Brexit trade deal presents a risk of crippling tariffs without without UK sourced batteries. Clearly something identified by Nissan in our opening story there.
It is. I mean, again, it's the topic. We were talking about it this week on the VRA webinar that I mentioned there. That this importance now around that rules of origin, around that ensuring supply of batteries for the UK automotive sector is huge. There is talks of plants being built. There is, we talked earlier about the Nissan opportunity there. We believe, that there is Tesla are trying to build something in Germany at the minute. There are rumours on the ground that maybe Tesla are also looking at the Honda Swindon plants for themselves as well. So again, lots going on in that market, and there's a lot of people trying to put pressure on the government at a time where they have reduced their reserve for the EV automotive sector recently. I think it went from 18 billion down to 1.3 billion, if my calculations and memory is correct. But again, it is really focused on the importance as we move through this time period towards that 2030 ban, to make sure that the UK has a secured battery supply for the automotive sector in the UK, and it would be great if we can. There's a lot going on that, but again, Dr. Andy Palmer there sort of emphasising that and trying to lobby that with the government to make sure that it is firmly on their radar.
Yeah, now next story, staying with this electric theme, is from AM Online, and the headline is Motorists Target £20,000 list price to make electric vehicle switch. Now, this is an interesting one. It's based on research carried out by Deloitte. They polled the views of 1,500 car buyers. And we've said this before on the podcast in recent weeks. Range anxiety is no longer the major issue. It's really the price points. How can you convince car buyers to make the switch to electric? And the price point has been a major obstacle. So the research carried out by Deloitte has identified that maybe £20,000 is the sort of switching point. That's the kind of price brand that the consumers would seriously look at before making their first electric purchase.
Yeah, and it is all about this total cost of ownership, as you say, Curtis. The move now away from the range anxiety. We know the new products coming into the market. And to be fair to the OEMs, the manufacturers there, they are putting focus on this. I think they do understand that shift, that leap from a combustion engine into the equivalent EV is a big leap, and it's one that they're trying to focus on. And a lot of them, we've seen that what VW have been doing over there in Germany, that they've been doing the e-Golf and trying to focus on that $250 a month bracket from that sort of cost of ownership. Nissan have been launching 0% finance offers for their Leaf, with a support of 15% deposit contribution, etc. And MG with the MG5 EV and the Vauxhall with their e-Corsa, trying to get people away from the list price onto that monthly cost. But again, looking at the survey, they've also they're reverting it straight back to the list price, aren't they? They're going straight back to that 20,000 bracket, as you've said there. And to be fair, there's a big job there, one in the new car market, but actually as big in the used car market, isn't there?
Yeah, absolutely right. And those deals that you mentioned, for the Nissan Leaf, that equates to £250 a month, which is within the bounds of possibility for a lot of car buyers. To take away the list price presented as £249 a month, and that could start to tip the scales.
Yeah, but it's trying to get those people, the consumer, away from that cost. That
yes.
link, because they are looking at. I mean, there's reports that it's a £10,000 to £15,000 leap in terms of cost new from the equivalent combustion engine into the EV. So there's a lot of work to do there, but it'll become to a point that you can't buy a combustion engine anyway, so that's the price of your EV. But we will see. So
Yes.
moving over to the Guardian now, and sticking with EVs, and it's a cracking story you found here, Curtis. This is looking at the electric car batteries with 5-minute charging times produced, and this has been a start-up business, hasn't it, that's been invested from some guys from the Chinese market, and this is in, where are they from? We did say
They're
Israel.
based in Israel, yeah. It's a company called StoreDot, based in Israel, and they've had funding from Eve Energy in China. And as you say, 5 minutes to charge a car. So that's kind of getting on for similar fueling times for petrol and diesel. So StoreDot, they've developed fast charging batteries for things like mobile phones, drones and scooters, and they've produced 1,000 batteries now that can be used as prototypes for cars. But what this story gets particularly interesting when you see some of the companies who are looking into this and backing them, including Daimler.
Yes.
So Daimler would be very interested in this. So we've got Daimler, BP, Samsung, and TDK. Good to see TDK back.
Yes.
I remember their cassettes well back in the 70s and 80s. Yes. But they're all gathering around StoreDot. So I think this is a company we're going to be seeing a lot more from over the coming years.
I think if they can get that right, and others follow, that charging, because we know that's one of the stumbling blocks. I mean, we've just been talking about obviously that purchase price, but that time where you can pull into a petrol station, we can't call them petrol stations anymore, can you? You can't even really call them fuel stations, would you, if they become EV charging points? But that sort of concept of being able to pull in, charge, pay and go in a very quick, timely manner is perfect for what the sector needs, isn't it, for this growth of EV. So I think you're right. I think this is one that we'll be watching very closely, and I'm sure those share investors out there will be trying to look at this as we're talking now to see whether if they're on the stock market, and if not, when they will be on the stock market for investment. But
that's our top tip for the day, isn't it?
Careful with that one.
Get in there early.
Yeah, there's better experts than me and you, Curtis, in that world that people should take advice from. So don't take our advice. And we've got an and finally, which is around the world of appointments. And I mean, we've got the headline, but below that there's been a lot of shifts, haven't there? And this is with the AM Online and Paul Wilcox, that will be well known to the market, as well as Stephen Norman. So Paul Wilcox has been appointed as Vauxhall MD after Stephen Norman has received a promotion. But this is two shifts within a lot of shifts that has happened there within the PSA group.
Yeah, and we're back to Stellantis, aren't we? We'll have to get used to saying that. It still sounds like a deodorant to me, but nonetheless. So Stephen Norman, UK MD of Vauxhall, he's moved on within the group as Vice President Sales and After Sales and Marketing for Opel and Vauxhall worldwide, and he joined the business in 2018 from within what was then the PSA group, and he joined 6 months after the acquisition, so he's really run the show since then, and he's made quite a name for himself within the UK. I think he's been well regarded. He's done a lot there. It's been a difficult time for Vauxhall, obviously, with cutting the network, refocusing, rebooting, but yes, his successor has been named by Paul Wilcox, who, as you say, will be familiar to a lot of listeners. Paul joins from Nissan, where he was heading up the Eurasia operations, but his background is very much with Nissan, because he was Nissan GB boss back in 2008 to 2011. He then went to Nissan Europe as VP for sales and marketing for a couple of years, and then in 2013, he returned to the UK as the MD of Volkswagen. But after just a few months, he returned to Nissan, where he was made chairman of Nissan Europe, which was a position he held from 2014 to 2018. And he does rejoin the brand at a challenging time. We've already talked about the shadow looming over the factory there. We've mentioned the network reduction. So but Paul is an established professional, and he's possibly the right man for the job at this particular time.
Yeah, there's a quote there, and it says that it's with great pride that I hand over to Paul Wilcox, and that's from
Stephen Norman.
Sorry, but it's that for its next stage in Vauxhall's brand journey, and there's a bit there that talks about the British brand since 1903.
Yes,
that puts a true light on that brand, and how long it's been there in Britain, the UK. So again, big moves, a lot of moves taking place now there, as you might expect. We covered some of them last week, and I think they're making some shifts fairly early on with the joint venture there, the acquisition and everything else. So.
And staying with the group, we can also tell you that Linda Jackson, who's the former UK boss of Citroën before she became the global boss of Citroën, has just been appointed the global boss of Peugeot, which well done, Linda. I mean, I remember her from my Motor Trader days. Very, very impressive manager there. And let's not forget, she's a Brit, so she's a Brit heading another French brand. So well done there to Linda Jackson.
And there's been a rumour that sort of landed this week, hasn't there, as well?
Yes.
With our good friend David Peel, who we talked about leaving recently, and there is a rumour that he may be looking at joining the Lookers group now. How true that is, we don't know, and I'm sure that we've proven with the conversations that we've just had previously about Trevor Fryn and others that they do tend to appear, don't they? And
yes,
there's sometimes some truth behind these rumours. So one that we'll be watching very closely to see what does happen there.
Yeah, so that's pretty much it for this week. That's all we've got time for. Thanks for joining us. You've been listening to the Motor Trade Radio podcast, brought to you in association with eBay Motors Group. Do join Philip and I again next weekend for all the chatter that matters. Until then, it's goodbye from me.
And it's goodbye from him.